All right, here we are. We're underway. I'll get a screen up for you. What do you got here? 3 days of soaking in the mineral springs. That sounds nice. That sounds very nice. 3 days off, huh? Disturbs the routine a little bit, but it's a good opportunity to clear the mind of any junk that may have infiltrated. That's how I like to use it. Anyways, MLK Day, all that fun stuff. And we're back, trying to find ways not to lose money in the market and ideally make some. So let's see, looking at the news. That's what I'm doing these days, trying to look at the news down here on the CNBC website. Just go down this list and, well, basically, I've just seen a lot of Trump, Greenland, tariff. These are the 3 words that keep popping out. So look at this, something by Ray Dalio just recently now. So, well, it seems pretty dramatic news. And something about the treasuries. There you go, tariffs and stuff. Anyways, this is all, I think all this is the kind of news that makes things want to move. You have the energy markets and, of course, the S&P as well. What happened to my screen here? There we go. So, anyways, I've been looking at that. And so I've attempted a couple of little things here. I'm in a short position here on the ES. And even without news that makes it want to break out, if you just look at this 30-minute price action, you have where it gapped down yesterday when the market was open for a little while, basically Europe and Asia. The US was closed. Very simple price action, right? Gap down, grinding away, more sideways than anything else, but you have the support level, pretty obvious level. A breakout happened a few hours ago, and then recently it goes back upward, broke out from, and here's your retest. Pretty straightforward, right? Your consolidation, breakout, retest. So on the 1 minute, that's that retest area. There's the breakout that happened, went down. There's a retest. That's me getting involved in the short. That's the entry. At the moment, I've got the stop up there, and targets are further lower. Those areas. The targets are based on the 30-minute chart here. So you got this low here, and I'm looking at the buyers further lower. Let's see if it goes. So that one. And a couple others that I picked up on. I just put on MCL. This is oil just, 10 minutes ago or so. Same idea. Take a look at this. Consolidation. What's interesting is that it dropped before it did the breakout of that resistance. And when the breakout happened, then it came back for the retest, and off it goes on its way, and I'm involved long on the retest. Now, what's interesting is here you have where it's in a tight consolidation and it dropped before basically spring shotting, of making a coiling up as a spring and going the other way. This is something I like to see. It's interesting price action. You look at the Wyckoff stuff that we talked about before. You have a false breakout in one way, then a genuine breakout the other way is likely to happen. This is giving me that vibe. And as far as it went down to, well, where there were buyers previously. So it went down there, found those buyers again, straight into the breakout. Don't touch the breakout. Let it go, come back and bounce. And I'm trying to get involved in the bounce. So this is just here, 10 minutes ago or so. The stop's still there. One partial order is up there, and the other is overhead, where we have further resistance. You can see the sellers right on that one. So anyways, let's see if this one goes. And what else we got? Gold, yes. Put on gold a little while ago. Again, the same thing as oil, right? Look at this. This is quite interesting. Firstly, you had this consolidation, big move up, consolidation, the breakout. And then again, it's in this consolidation here. You have the obvious resistance right up there. And once again, it goes down before it goes up. So this is interesting. Again, false breakout one way, find those new buyers, leads to the genuine breakout the other way. That's why I have the confidence to put on this kind of trade. Looking at the 1 minute, there you go. Breakout, come down, retest, off it goes. So I've just got these positions on at the moment. Well, these stops are in the wrong place. Oh, should be the same place. Hold on a sec. What is this? Come on. Whatever. It's hardly going to make a difference. No big deal. Leave it alone. Anyways, so I've got these positions on for now. Trying to see if I can do something with this. I did the same thing on silver about an hour ago, and took close to a break-even stop somewhere in this area. So again, price action. Price action is king. Price action is simple to read if you know what to look for. There's only two things that happen. It consolidates or it goes directional, meaning price either goes sideways or directional. And it flip-flops, right? It's either going sideways. Well, when it's going sideways, the next thing is it goes directional. And when it goes directional, the next thing is it goes sideways. And that's it. So you want to identify direction. Well, wait for it. Identify where it went sideways, and then wait for the breakout from there. And ideally, you have a catalyst that helps with the breakout. Give the price a reason to move from where it's been stuck. So that's that. The Qs, similar setup, a little tricky, similar to the ES, but a little tricky because you can see this consolidation, then the breakdown, and it's kind of tricky. It kind of went sideways here, but not really. And sure enough, goes down, come back up. Can you call this a retest of those previous lows? Yeah, perhaps, maybe, but it's hard for me to identify this as sideways. So, if you have a doubt, don't touch it. So I'm not too bothered about this. And I was looking at this. This is the Russell 2000. This is interesting. Again, same thing. Gap down. It's consolidating. A little tricky, not ideal. But you have the well-defined low right there. There's your breakout. Goes back up. Here's your retest, and it's continuing down. And here's the thing about retests. What you'll find is when there's a breakout, it's a momentum situation. It'll go for a little bit. When the retest happens and it completes a successful retest, generally, I like to think the retest is where the real trend begins. And so it goes further, it goes a longer distance than just the breakout. So, let it run. In this case, if you were short here, you might take some partials here, but I would put the target most likely down in this area. You can see where the buyers were down here. So that's that price action. Fun, huh? Anyone got any questions? Anything you want to discuss? We still have some time to the open. But that's really all I'm looking at. It's interesting price action. Gold on the move. That's fun. And ES, yeah, well, moved in my favor, but wait and see what happens. Vinay, what's going on with QBTS? You want to share? I have no idea about it. I don't even have the data to look at it. You see something, let us know. We can look at it. This would have been fun to get involved in, Russell. Anyways, so here's something interesting. I spent the last we had the weekend, so I spent a bit of time looking at my trades previously when I was trading options, trying to see what I was doing different there than what I'm doing here with futures. And so I was looking at screenshots and trade reviews that I did last year, all those things. And oh my goodness, whoa, no way, I'm not doing that again. Looking at that, the options price action and the way I was trading it, as in trying to find ways to manage risk on it. Looking back on it now, it's definitely not something I want to do. I know how to do it, but I realize that, man, that is just unnecessarily risky. I'm trying to do things in a way now that is not as risky as that. Basically tighten up my trading. Because with options, all the various problems, various details you have to pay attention to. This is just easier. Because I was thinking, maybe, what, while I'm figuring out this futures thing, I can still trade options. What's the big deal? I know how to do it. But I realize it takes a different mindset to do what I did last year. You got to be zoomed in into that 1 minute price action and watching the options chart like a hawk and watching the liquidity. That was a problem. So yeah, it takes a certain mindset, the kind of mindset I'm moving away from, to get in and get aggressive and all that. I'm still going to be aggressive, of course. I think that's part of me, but trade in a way where there's less details to pay attention to with the futures market here, where time decay and liquidity is not a problem. You don't have to go and figure out, should we go in the money or out the money? Is there momentum? Is there not? All those things drive decisions with options. Not so much here. This is just simpler and with more leverage. Holy crap. These instruments are very leveraged, so be careful with it with futures. But going to the 80-20 principle again, I find futures to be very, very 80-20. It gives you everything you need. You don't even have to bother with the PDT rule, the $25,000 minimum account as an American. No issue with that. You just trade. Just trade if and when it sets up. So, wow. Again, just evolving as a trader, right? For those first 5-6 years or so, I just evolved to a point where I got into that options market and basically went as far as I could with that. And now this is just the next step of that evolution, evolving into futures trading and making trading simpler and bigger at the same time. So all that fun stuff. All right, what do we got? Got an error message here. Maximum order quantity. Please change your quantity. Didn't put any orders in. What the hell? Ninja's a bit funny, huh? It's I don't know. I haven't figured out the platform completely yet. But once the big size comes in, that's why I really got to pay attention. Can it really liquidate quickly without a problem? DOS was good for that. We'll find out. But again, going into the futures market, I don't think its liquidity is going to be a real problem. Doesn't seem like it. So yeah, that's that. What else is on your mind, guys? A couple of minutes to the open. Let me know. What I'm curious to watch will be at the open will be good pre-market activity that leads to a breakout. Let's see if we find something. So here, this thing's already done its breakout. It's gone up. Everything looks bearish to me on the SPY here. But of course, you know, the open jumps around and stuff. So anyways, I got to stop in place there. Let's see if I can tighten it. Can I tighten this? Is it in the right place? Not really. Got to give it this kind of room at least for the open. What about here? I'm not in this, but see, if I was interested in truly trading the open, I would identify a price action, something like this. That's a consolidation. Then at the open, it breaks that pre-market consolidation. That's a very easy way to trade the open. Well, not easy, but I'd say simple. At least the technical side of it is very simple. Let's see if we find some of that. Nothing here. This one's just on the move as well. Oh, here we go. Oh, this is a 1 minute chart. Oil. Oh, geez, look at that. Yeah, this thing went through the roof, didn't hit me. What's going on here? That should liquidate, right? Okay. All right. Sell, 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 sell. Okay, there we go. Got some profits on that one. Got 75 contracts to go up there. Cool. Oh, wait, what happened here? I told you, I don't have the platform totally figured out. So it's put me in short position.
You didn't close the position, you shorted it.
Yeah, it put me into a short. Nah, crap. Yeah. Anyway, that's part of the platform issues. I haven't figured out the platform. But good to know at least the trade works. You know how to trade this thing. So hit that target, and it's all risk-free to partial and go for the next one. So I hit the sell button, right? You hit 25 and you sell it. I gotta work out these little kinks. Anyways, no big deal. So there you go. Again, price action, consolidation, drop, breakout, retest, and it goes. Not too complicated. Gold is on the move as well. Look at that. Should be getting close to that target soon. Let's see if this one goes at the open. Silver, not on the move. But silver is interesting. I think I'll watch this at the open. If you look at this, what I'm looking for is a well-defined pre-market activity. So you have the overhead resistance well-defined. So as also you have the previous resistance. Looks like it's turned into support. So you have that area. So if you're interested in scalping the open, break out to the upside, break out to the downside. Pretty straightforward. I gotta figure out these hotkeys here, huh? Yeah. But it's important not to go live, right? Not until you figure every detail out. All right. So silver, let's watch this. I think there's a lot to be understood with this price action. It's probably going to be complicated. That's when it's good, right? So we can learn things. So you got to give us a masterclass on NinjaTrader and how to use it, man.
I just started using it. I don't know yet.
Yeah. Fair enough. Yeah, I've been with this thing a couple of months and you see I'm still hitting the wrong buttons all the time. Yeah. Oh, well. Real quick. There you go. The market's open. The gold position. All right. Let's see what will happen there. And silver. All right. This is the fun one. Looks like the ES stopped me. There you go. Yep, ES took the little stop out. Now you see the SPY looks bullish to begin with, but seriously, there's a short at the top here. See where I got the line on this 30-minute chart? That was support, breakdown, retest. I will not go long anywhere here. Long would be way overhead. So be careful with that. All right, now scalping the open style of trading. You can see the silver is just inside of its chop zone. Look to the left. This is where it's choppy. Wait for the breakdown or break to the upside. Let's see. So far, the 1 minute is more bearish than anything else. Weak, huh? Meanwhile, anyone gonna share anything? Let me know. You can share a screen as well. We can look at it together. Whatever you like.
Just a quick question here, Albi.
Yeah.
When we set the targets and levels and targets, for instance, A and D, that we define 228 is a potential long if it holds the level, and the target is potentially 232, something like that. So if it happens that it actually goes up straight right in the first minute, it hits 228, goes up and hits the target 232. Does it mean that actually our levels are basically this level is this long is now invalidated and we have to leave it completely, or we have to wait for it to come back to 228 and see if it holds it for another run up?
When you're talking about targets, you're saying you're already in a position and you're going to take profits at that level?
No. I mean, we have defined the levels to enter in a long position. For instance, in A and B, we said if it holds 228, then we enter long, and then our target is going to be like 232 or something like that. What happens, it goes above 228 and it hits the target in the very first minute. Then what's the plan?
And wait for it to establish that that level is firm support and the buyers are coming in at that level before you go long and go from there to the next level. So just because it gets to that level, as in that's an area you would like to enter, and just because it gets there quickly doesn't mean you enter quickly. You still got to wait and see what the price wants to do at that level. So you got to have your indications, and there's basically three things that can happen at a level. It can go there and get stuck there, so it goes sideways. It can go and turn that level into a reversal area, so go back where it came from, or it can continue on from that level. Now, to figure out which one's going to happen, which one's most likely going to happen, you're going to have your trade book well defined, have your indicators, whatever you like to look at. Personally, I'm looking at candlesticks. But once you have your indicators well defined, then wait for it, as in wait for those indications to come around. If one of three of them come around, then you know what to do. If your indications are telling you it's going sideways, well, you know what to do. Don't touch it. If you're getting your big old long tail hammer ABCD, then it looks like it's going to continue long. So that's usually when I would enter long. But for that to happen, it takes multiple candles. If you're trading the open, it'll probably take 5 or 6 minutes after that first initial pop before you get a ABCD, which eventually turns into a 5-minute ORB. And the same going down the other way. So wait for it. Just wait for it. Just because it got there doesn't mean you have to jump in. And you're better off just waiting out the open anyway.
Right. Thank you.
Most of the time, it's it's a choppy mess. Sure. What we got here? Google broke pre-market high. There you go. So just got some insight, guys. Google. And here we go. We're getting the breakdown on silver as well. We have that pre-market support. You can see where it got there. Consolidation breakdown. This is your 5-minute ORB going down. Comes down, consolidate, or just what we were talking about in the other way. So on a 1-minute perspective, with the momentum generally looking weak so far. Silver. But let's see. The way I trade, I would look on the bigger picture and look to the left. This is just a messy area. Scalp it going down if you're going to scalp it. If you're going to go down, go short with it. I think it's a scalp. I'd be more interested in a long breakout. And what happened? Looks like the gold position stopped out. Yeah, it didn't get to the target. That's a shame. I was in a good position. Rode it from, I don't know, here maybe? All the way to pull back. and out. Break even or something. Oil, yeah. So that trade worked nicely. So far, I would still be in it if I didn't hit the wrong buttons. Let's see. All right, this is interesting. Look at this activity on the SPY. These are the ES futures on the 30-minute chart, same as the SPY. Consolidation, you have the support, the breakdown happened, the retest happened for that short, but then it's not really continuing to go. It's actually pushed back up into what was previous support, now turned resistance. So it may be doing another retest. As long as these highs are getting lower, you can still look at sellers coming into this area and pushing it down. It's if the price action goes back into this consolidation, basically reclaiming this, the bottom of this candle right here. So that interesting level. Once it reclaims and sits in there, then it's a no-go. Don't touch it. For now, you can still look at it as a short. Go into the 1 minute. See if you're getting any short activity. For now, the 1 minute doesn't look that way. It looks like it's more bullish than anything else. So, interesting place, huh? That's the thing about trading. Most of the time, there is no opportunity to enter. Talking like 95% of the time. You'll see one indication that'll tell you, okay, it's good to go, and the other one will tell you no. For me, I'm looking at the 30 and the 1. And so far, the 30 would say, yeah, it still looks like a short. The 1 says it's basically bullish since the open. So don't touch it, right? What else we got here? Looks like something with Lowe's, public company Lowe's. Something in the news there if you guys like scalping stuff. And Airbnb. There's news on Airbnb as well. Amazon as well. Well, there you go. A few tickers you may want to look at. Might have had a gap. So I've narrowed down the tickers I was looking at. If you remember last week, I was looking even at crypto futures as well as the Dow Jones and some FX stuff. I figured let's just narrow it down and focus in on these, which is basically I've got the ES, the Qs, the Russell 2000, kind of like the opposite end. Oh, look at that reversal setup. Can you look at it? And then you have oil, gold, and silver. I'm just gonna focus in on these. And also another thing that I figured is last week you guys saw me trying to focus in on just the 30-minute chart and find a way to trade that. But it turns out the last few weeks I'm not satisfied with the results with that because I'm taking a lot of break-even stop outs. Like it's unbelievable. So you know, a lot of the trades that I enter go in my favor quite nicely, and then I de-risk it, move the stop in, and then take the break-even stop. It's kind of hard to make money when you're just doing that all the time. So to make it, to kind of work around that, I'm going back to what I used to do, which is looking at the 1 minute. So it's the fractal pattern thing. So you got the 30-minute chart and then the 1 minute chart. And they both got to align. And then I have an opportunity to take the entry. And the thing about taking the entry on a 1 minute, let's say if I entered down here in a 1 minute, you know, it's always a tighter stop on the 1, which then the RVR is much easier to manage. So I'm more likely to put targets where, you know, partial, so I can take at least a partial trade. So nothing new, just the same stuff I've done over the years. I experimented with a 30-minute chart, and I haven't found a way to trade it effectively just yet. Anyways, plenty of opportunity in the markets. But let's look at this. This is interesting. The Russell, right? We discussed this last week. If you remember, I think this was Thursday. I don't even remember. Where there was some news about capital leaving the Mag 7 and rotation. And so whenever you see capital leaving, I'm always thinking, okay, where is it going to go to? You just look at the opposite end of the market, which is the Russell 2000. It's the opposite of basically the Mag 7. And sure enough, on that day, see what happened. Middle of the day or so. Not middle, sorry, what is it? Oh yeah, right at the open. And just broke out and went. Total ripper. Right? And if you look at it now again, this seems to really have a lot of capital going into it, buying. A lot of buying. That is interesting. Again, just looking at the news, you anticipate rotation. When some capital doesn't just leave the market, it always goes somewhere else. So if you want to use the news, then you can have those ideas. As far as patterns are concerned, check this out. This thing has basically been in a downtrend and then put in a neat looking double bottom. I like this double bottom. Oops, where'd it go? I lost my way. There we go. I think this is a good looking double bottom where you have a second high, a second low is higher than the first one. Fully bullish candle. The entry is the new high. Stop should be below it. And you're on your way. As well as you have a nice gap between the two bottoms. And one thing that's also important is that the bottoms, the double bottom should happen in an interesting area. And sure enough, look at this. Look at that big reversal right there. You can see these wicks down here. Lots of wicks in this area where the double bottom occurred. So, man, why didn't you guys tell me about this 10 minutes ago? I can't see everything. What the hell? That's a good one. It's a very good one. Let's see on a 1 minute chart. What would it look like? Yeah, there you go. We were just discussing this, right? Pre-market, you want a tight consolidation, a break of the consolidation, the potential momentum setup, and this did it precisely. Oh, what the hell? I should have seen this. And if you had that entry, you have the target up there, and sure enough, look what happened. It got there, consolidated, and went. I think Nasser was talking about this earlier, so this is a good example. So if it quickly goes to your target, let's say you took the long, you got the target, but let's say you didn't take anything, and you're interested in this area, is it going to reverse from here? Let's see, you get this, right? You enter, and it goes up there, or you don't enter, and it goes up there to that level. You're thinking it may reverse, right? You don't know. And it looks like it may reverse, right, on this one. Would you take it short? Now you're not sure because now I put in this hammer. What else? Now look at that. It looks very bullish off of the hammer, printing a new high in a moment. There it goes. Printed a new high, but didn't really go. Would you short it now? Are you seeing a reversal in this or a continuation? There you go. New highs, right? And then it goes. So the way I read this is at the level, if it goes and it consolidates as in it starts going sideways, which it did do these first two candles, look, it's gone nowhere. This is not a reversal. This is sideways. Then this one here, this is that long tail hammer. During a consolidation, it pops out of the consolidation, puts in a hammer where the tail is more than 3 times the length of the body, a tiny little body, almost no wick on top, very tiny. That's a very good setup. That's telling me a continuation setup at a level. So it goes, puts in the hammer during the consolidation, basically the ABCD, the entry is the new high, which happened on the next candle, the stop is right below it, and you're in this one. So this one's set up very nicely as a consolidation. But if you're sitting here and thinking, okay, it hit a level, it's looking bearish, and then you go short it here, now you're in trouble. Right? There is no reversal. There's no double top. It never happened. Right? So that's how I read this action. And it turns into a nice 5-minute ABCD, if you like that stuff. Again, these are the patterns I look for on the 30-minute. If I see it on the 30, then I'll go into the 1 and try and get involved. So there you go, Nasser. You got a real-time example of what you were just asking about. So you can see it takes a few minutes. You don't just jump in at a level. Oh, that's a good one. And sure enough, you got the major targets up in this area where it is now. You can see that's where trouble is. Let's see if it sets up anything else at this level. So far, we know this area is trouble. So it got there, pushed down a little, pushed up a little. So far, this is telling me it's going sideways. It's not telling me it's continuing or reversing. There's no signal at the moment. So once again, sideways activity. And when it's sideways, you know what to do, right? Don't take a directional position when it's sideways. Don't go long or short. That's the key. Yeah, this was good price action. If I had planned it, I could have planned it before the market opened. I've done this before. I planned these sorts of trades on fractal patterns. You guys saw me do this in 2023 and 24. Plan it and go. No big deal. Did so many trades like this. Wow. Fun. See, break of high of day. Is this your kind of trade? To breakout? Should happen with volume against scalping situations if you guys like these things. It's not my style, but it's there. What are we looking at? So Hill saying NVIDIA breaking pre-market low. All right. Thank you, Sal. Take a look at NVIDIA, guys. Again, pre-market low. Again, remember, breakouts, in my opinion, the best breakouts happen when they happen out of long and tight consolidations. So the longer and narrower the consolidation, the more explosive the breakout. And ideally, there's a catalyst that makes it want to go. And if you're watching charts and scalping stuff, you're looking at volume increasing on the breakout as well. Get all of that coming together, you could really have something. So pay attention to those sorts of things. Those are the elements of a breakout. And again, that's something I'm also focusing in on these days. Trying to identify breakouts more than all these, many different kinds of patterns all the time. What do we got here on oil? Let's see. Yeah, would have got to that target, and what did I put? What did I put the old other target? What was it? Here. Yeah. So what it pretty much got there. Wow. Like I was saying, this was a good breakout on oil, right? I was telling you guys everything. The consolidation, you get the breakout, the retest, off it goes. And live accounting, this is something that a year ago I would risk $50,000 on this and go into six figures, multiple six figures. This kind of trade. So this is the ideal kind of trading. You don't need a whole lot of them. Much easier than options, right? Try this stuff with options. You stop out 3 times and you get one to work, and then you make money for the day. But why put yourself through all that? You guys have seen all that. 2025, we did all that stuff. What's up with gold? Did it go? Oh, look at this. So the breakout came back. Is it a retest? See the 1 minute on gold? It's such a mess. I wouldn't trust it. It's made these higher highs and then lower lows at the same time. This is where it's divergent price action. Please don't play with this unless you're an ultra fast scalper and you know what you're doing with that. This is not where you make big money. And silver, yeah, looks like a lot of trouble as well. More down than up. Let's see, what did we have? We had, oh yes, we had the pre-market thing on silver. Here you go. It happened, right? Yeah, we were talking about this. 930, and it was basically weak. It broke down. You would have had that scalp. You would have stopped out. If you identified the retest, what, 3 minutes ago or so? Look at that. That's a good one. Look at that candle. See this one? Reverse hammer right there. That's it. It's retesting that whole pre-market low area. And sure enough, there's momentum going down. So if you're identifying the breakout earlier and identifying this as a retest, remember the retest generally sets up for a bigger, longer move than the breakout itself. So once it gets to the breakout low, maybe take a little off, but really try and see if you can get a bigger move out of it, because that's more typical. But again, 30-minute on this one doesn't look bearish at all. Oh, look at that. Some interesting price action today. Fun. Fun. All right, these are the cues. I'm not seeing anything on this. Again, a great big mess. Oh, look at that. Sure enough, we were looking at this big double bottom on the Russell 2000. It got to, on a 30-minute chart, look at that. It got to where you expect resistance, because it's been resistance previously right there. And sure enough, it drops down from there. So if you had your long, that's your target. I mean, does it get easier? Any of you guys still partial when you get into trades? You jump in, it goes a little in your favor, and you start hitting the button. Why would you do that? You can identify targets. Just leave it for the target. You make more money, really, and you're less stressed out about it. You don't have to be all jerky in your trading. Let it flow. This one would have flowed nicely if you were open-minded to the double bottom down here. I wasn't even looking at this. Anyways, as setups go, let's see. Oh, look at that. That's a fun one. So we know this level right here, and so far it's rejected it. Anyone see a reversal up here? This is fine. Anyone see a reversal up here? This is a level right up here. Are you guys all sleeping? Over trading? It looks like it's going weak. Either you're all over trading or I can't hear a word. Anyways, I don't see a reversal. There you go. Saber's awake. No, I don't see a reversal. Even though you know this is resistance right up here, there are most likely going to be sellers here. On a 1 minute, though, you do get a double top, but the double top, you should have the second top lower than the first, which has not happened. There's no way I would trust a short up here. It may still go short. I have no idea, but I wouldn't risk money on it. Not my kind of game. Yeah, the fun long would have been here. You take off 90% at this target, and then you have some areas overhead you might hold for. Or even add more. All right, what happened to oil? Yeah, we saw that. We saw gold. Yeah, big mess. And yeah, big mess. Yeah, silver. What's with silver? Yeah, retest, but still messy. So the ES. No, oh yeah, here we go. Again, more price action. This is fun. So a few minutes ago, we were saying this was the breakout that happened, the retest happened, and it could be doing another retest if it continues making a lower high, but it didn't. Look at that. It made a higher high. Oh, sorry. Yeah, just a higher high. So it's now back into the consolidation zone. There's no longer a retest to my eyes over here. The breakout happened, made a bit of a momentum move. The retest happened, but didn't continue. Now it's back into chump. Now don't play with it. It's grinding away. Yeah, you don't want to play with this. So there you go. That's my read on this price action. At the moment, don't touch it. Earlier it looked okay. I'm fine.
Back
Yeah,
into
Nasser, go ahead.
AMD, it went up, and can you bring up the AMD on your chart?
I don't have AMD on my chart. I don't have the data. You can share yours and look at it if you want.
Just find the way how to do that. Share, present. Just quickly check. Okay. Can you see this?
Just a moment. It's pulling up.
Right. So
Yep, I see
AMD, it dropped to 228, where we basically highlighted it as a level to enter if it holds, and it actually goes back up and it hits the target again. So where is the entry here? So what is the confirmation in this area? So if you want to say, this is already halted.
Yeah. So what you're looking at here is you're looking at the breakout that happened in the first minute from the pre-market high. And then when it came back and bounced off, it bounced off of the breakout level, right? Which was that pre-market high. Now, the way I do these retests is you're looking for the first bullish candle. And bullish means the candle went from down to up and it closed at its own high. So you might want to zoom into these 1 minute candles. Which one of these was genuinely bullish? Not that first one. Not that second little one. I see a wick on the upside of it.
How about this one?
The third one.
Okay.
No. That thing's come straight down, and that's a tiny candle. You want bullish. Bullish means, buyer's going to make the price move. It didn't move anywhere, this thing. It opened and closed in the same place. Got a wick, but really, that's a tough one to enter. If you wanted to go with a hammer, go with a real hammer. That one's just tiny. In the context of these candles, that one's tiny. But if you look at, you see where the candles started becoming bullish. 1, 2, 3, 4 candles. The third one, yeah, right there. That's the first genuinely bullish candle that I see. Then my entry may be the new high. When the next candle prints one tick higher, that would be an entry.
In that case, my
below the
RBR is 1
previous
to
candle.
1. It's actually not worth it.
If you're targeting high of day,
Right.
yes, it's 1 to 1. So now you got to realize your target. So if this happens and the RVR doesn't work out, then don't take it. Even with a perfect setup, don't take it.
That's in the 5 minutes. It doesn't matter.
5 minutes. There's nothing here. There's nothing to look at here. I don't see any setups.
Thank you.
Yeah, sure. again, key thing, even if you get perfect setups, the way I like to do things is don't take it if there's no RVR. If the market doesn't offer you good RVR, don't take a perfect setup. So you need a perfect setup and the RVR in your favor, then you give yourself a chance to make some money. Otherwise, you're always going to be struggling.
Thanks.
Always. So keep that in mind. Yeah. Sure. All right. What do we have here? SPY is a cryptic mess. Most things seem to be in a messy place right now. Even the Russell. The Russell is so interesting. I might focus more on this. I've seen some good price action here in the near future. Let's see. Don't really want to focus on the Dow. That's more difficult. Of course, oil. Oil is very interesting. And gold. Yeah, gold and silver, of course, always in the markets. But yeah, cool. I don't see anything setting up now. Anything in the news, guys? Anyone know of the schedule? Is there anything supposed to come out today? These are not things I tend to look at. What do we got here? Brian, nothing in the news? Okay. Yeah, sure. Yeah. People are still coming back from holiday. What you got here, Evo? You missed a nice ABCD on AMDL. Yeah. It happens all the time, man. Hey, look, I missed I missed $1 million trade on this double bottom. You believe it? 6 months ago, I would have been all over this. But now, because I'm trying to get a grip on the futures market and the platform, not even trading live. But this would have been huge. And this is a near perfect setup. Yes, you snooze, you lose. Nah, but it's worth it. It's worth taking some time to go figure something else out. You know, I'm here for the long term. I'm not like, oh, I have to make money this month, otherwise I'm out of business. It's not like that. Can happily take a few months, even a year, to figure stuff out, which potentially is going to be a lot bigger than anything else I've ever done. Might as well. Like I said earlier, guys, I was looking at the options trading that I was doing last year, and it feels like it's firmly in the past. I just don't want to do that anymore. I know that it's limitations. So that's only as far as I can go with it, as far as the market liquidity and all that is concerned. And also then just the whole experience of trading. You have to be so wired. And being that wired, I don't think it suits me. I'm not 22 years old anymore. I'd rather go at a slower pace and think bigger, much bigger. So it's worth figuring out bigger stuff. Take the time to work it out. It took, what, four years before I got into that kind of aggressive options trading that I did. I don't anticipate this taking 4 years. Maybe a few months, a year. But I think the potential is enormous. Absolutely enormous. I think the hard part is, again, becoming more patient. I was getting into these 30-minute chart trades with something like silver or oil. You're not going to get setups every day, not going to get news every day that makes it want to move. And this is the energy market and the commodities market. This thing moves when it wants to go. With the news, it goes. So you got to really be patient and sit and wait for those setups to happen. Maybe once in a week, you might get something really outstanding. I think that's going to be the real mind shift that I've got to work on before I go live again. But worth figuring out, right? Kind of crazy. Like, just look at the silver market here. That's the one chart. Let's go to this one. Every point is worth $1,000 on with one contract. So let's say 94 down here up to 95. The move it's just made now in these last few minutes. One contract would be $1,000 move, and it only costs $250 to get into one contract with this broker. So again, talking about leverage and getting into decent positions. Once your entries are good and your stop is in a good spot, you've managed the risk even with leverage. And then this thing goes a little bit. Oof, this is more leverage than options are, in my experience. So I think the potential is enormous. Just gotta find a good, sensible way of trading it. And I think it's just a matter of going slower. Finding ways to go slower and slower and slower and slower. Snail's pace, really. Let the market come to you, and then put on the trade, and then let it go away from you. And you just ride it. That's a great, fun way to trade. My mind is all about that stuff these days. Not that option stuff, not anymore. There you go. Oliver, you see the same thing with futures, yeah. Patience is the key with the futures market, yeah. What you got here, Evo? You're saying took you years to burn FOMO out of your mind. Abundance mindset versus scarcity. Yep, there you go. All the stuff we've been talking about. Yep. Abundance versus scarcity mindset. Got a whole section on that in my course. You guys know where that is in our YouTube channel. Take a look at that if you're struggling with patience and the market as a gold mine and the abundance mindset and how to really train yourself for it, for the abundance mindset. It's actually really, really important. I think it's enormously helpful. It really got me away from all that nonsense scalping that we've all read in the book, you know, how to day trade and all these other communities, just doing all this amateur stuff. Really, very few people can actually do it. Most people just blow up and end up buying new subscriptions. It's kind of stupid, I think. So you really want to get bigger, get that abundance mindset working, and you'll suddenly realize that you just don't have to be stupid. Go that way. You just don't have to be stupid. The world is incredibly abundant, especially the financial markets. Oh my goodness. I thought I was making good money when I was just trading the catalyst tickers. You know, like Disney would be in the news, or Nike would be in the news, or DHL or whatever. I'd just go scalp the open 5-minute ORV stuff. And that was okay. I thought, wow, this is cool. I was making what, $500 to $1,000 a day, no big deal. I was averaging about that much. And I thought, wow, this is huge. But I mean, after that, you guys have seen what I've done here. It's the market is so insanely abundant. Now it's like multiple six figures in any single trade is just a normal thing. So again, once you open up your mind to what's actually available out there, whoa. And then you don't need a lot of capital to actually get involved in these things. Again, go slower, think smarter, think bigger. All those fun things. And you'll see. There's plenty. What do we got here, Dan? U.S. Supreme Court set to release more rulings as Trump tariffs decision looms. Ooh, fun. So what? He threatened tariffs on, I believe, Greenland again. And what? So the Supreme Court has to say yes or no if those tariffs are going to come into play. Is that how this works? Don't really know. Whatever it is, it's going to make the markets move. The U.S. market, which is, well, S&P. It's not really domestic news. I don't think that has a massive impact on the Russell, but of course it'll have something. But I just think, again, commodities, that's the market that will move the most. We've already seen it here with oil and silver and gold. Look at this big jump up over the holiday, over the 3-day weekend. This is gold right here. Huge. Again, simple pattern, right? It goes, it consolidates, it goes again. It did not give you the long tail hammer that sticks out with room to the left to tell you it's going to continue. But when it hits the breakout area, right about there, you can start looking at it. Maybe there's a retest on a 1-minute chart. These are 30-minute candles. So on a 1-minute chart, you may have got a retest around here. Well, let's look and see. It's just about overnight. Yeah, there, right in this area. Look at that. See that on the 1-minute chart? But let's find that breakout area quickly. Let's do a little exercise. It's right there. Okay. So let's say 4700, approximately right about there. And when you got there, look at that. Breakout, retest, and you've made $1 million. Look at that. Talk about patience, huh? If you have the patience to wait for this kind of thing, let it buzz when it gets there. I mean, don't sit there and watch it for 20 hours. Let it buzz, let the alert come to you, then open up a 1-minute chart and see if there's a setup. As in a breakout or retest, your entry's probably in this area. Stop right below it. And there you go. You're riding gold into all-time highs. Not too bad. Huh? There's many ways to measure targets up there. So this kind of trading, I think, is the way to go. It's simple. It's slow. It's completely de-stressed. And massive RVR. Got pretty much every element that I like. Same thing with silver, was it? Silver, if you did the same thing on silver, you would have taken the entry here, taken a tiny stop. And then, I don't know if there was an entry here. This looks like a decent entry. You may have even taken a partial and then stop. That's part of it, right? You take 1 or 2 stops, no big deal, and you get 1 to run. That's easy enough. Not too much to do. Yeah. Where's the Russell? Here it is. Yeah, look at this one. What happened with the open? At the open, it just went. For this one, we were saying this 5-minute ORB setup. Let's say you missed the absolute open when the Russell opened with the double bottom and just printed a new high, would mean that you get involved basically right here at the top of the first minute candle. You're going long with the stop below it. And if you missed that, no big deal. You wait for this. This was a really neat setup. And you'd still be holding on to it. You'd probably take partials up there, at least de-risk it, so your stop and your break even will be in the same place. And you could still sit on this. There's many ways to manage it. Overall, it's much more bullish than anything else. So bigger picture in the next few hours, most likely to move upwards. And that's how I see it. All right, I'm getting tired of my own voice. Who's got something to say? Somebody entertain me, please. Everyone's over trading, huh? Fun. Let's see if anything else came out in the news here. Anything worthwhile. Dan mentioned the Supreme Court ruling. Let's see. Greenland tensions ratchet up. Okay. What do we got? Evo, sitting on your hands for now. Very good. The art of boredom. Best way to deal with boredom, especially in the trading environment, is to have a group you can just interact with. Like we have here, we're just trading, but since there isn't much to trade, we can sit here and talk about things. Play games even. I'm telling you, it's the best thing to do. Otherwise, if you're sitting on your own, well, it's much easier to fall into overtrading. Much easier. I'm telling you, it's a big deal. It's a very big deal. Okay, now here's this news that the tariffs may be upended by the Supreme Court decision. Okay, this is just nonstop. See how people think about themselves. What is this? The leader always. Okay, that's not market news. Anyways, geopolitics makes things move. You know, something like this with the Russell 2000, you look at interest rates moving. When there's interest rates announcements, then I would look at the Russell 2000, because these are basically small businesses, domestic businesses. Not really small. I mean, they're on the stock market, but the smallest 2,000 of them. And so they are more sensitive to interest rates in the domestic environment. And the other news that would work is when you have capital rotation from one sector to another. So that kind of news would inspire a breakout on the Russell. And once that happens on a bigger picture, then it's likely to be in play for a few days, maybe a few weeks. Oh, here we go. What does it say? The Dow dropped 600 points on Trump's Greenland thing. Okay. Capital flagged fear of global trade war. Oh, these catchy headlines. Fun. Dow Jones crashed. Great. Anyone watching the Dow Jones? I think Suchit, were you watching it in the pre-market? Then you mentioned it, right? Were you? Yeah. I took it off my charts. Look at that. This is interesting. Now we have the SPY retested again. So what we were saying earlier was look at it like this. You have this consolidation, then the breakout to the downside happened right there. Then goes back up, and there's your retest happening. Where is it? Yeah, just about in that area. Then your move starts downwards. And then it made even a higher high than previously. So it's kind of hard to see this as a retest, another retest. And so far, it's pushing down from there. So you can see it's a little tricky now. On a 30. On a 1, if you're going to trade this, I'd say wait for a break of this low down here, pre-market low. And then maybe you get some momentum downside to the downside. So it's getting trickier and trickier, this price action. No rulings made by Supreme Court. Is that right, Brian? Okay. So I don't know how all this stuff works. Somebody says, let's do something, and the Supreme Court says yes or no. Is that it? That's how it works. All good. What are you looking at, Saber? We're looking at when an all-time high break happens and you enter the trade, there's no level. How do you measure the RVR? Yeah, good point. So there's a few ways to do this. The simple way is go with something like a 3R target. When it goes to 3R, take it off. 5R, take it off, whatever. That's an easy way to do it. But I like to do it in a different way. I like measured moves. And I think I saw it somewhere here. Okay, we're in gold here. This is interesting. So let's say you get the break there. All right, this is gold. You have this consolidation. You have this all-time high. If it breaks, you enter long. Where's your target? So I would look at the distance of this consolidation. You have it up here at about 47.40. That's the top. You have it down here at 47.20. So let's say about 20 points. So at 47.40, then you take 20 points from there. You go to 47.60. So I would just measure this distance and add it on from the breakout. That's how far it goes. 47.60. Let's see what would have happened. And yeah, just about got there, huh? Barely. That's a measured move. Nice and simple. So I like to do it. Let's look at this one. If you have this high over here, let's say 4,700. You be a little conservative with these things. 4,700. The bottom here is 46.60. So let's say 40 points. So from 4,700, it should be 60 points. Is it? Or did I say that right? No, I got it wrong. 40 points. Sorry, 40 points. From 4,700, if you catch the breakout of this high here, you go 40 points. That should put you at 47.40. Let's see if it went that way. Got the breakout, and there you go. You hit 47.40. That's your target, and that's where it starts coming down from. Measured moves. That's all there is. Actually, they're very easy. They're surprisingly easy. Much easier than just going for 3R, because 3R, well, you leave a lot of money on the table, right? Again, that's why you guys saw me do measured moves with those Fibonacci levels last year. That was epic. It worked so beautifully. It was so easy. You know exactly what to measure. It's that candle. Measure that and go. Measured moves are the easiest way to trade. I mean, as far as finding targets are concerned. I used to find entries using that as well, but it's more for targets, in my opinion, the way I see it these days. So yeah, that's how I do these things. All-time highs, no levels. Just go with measured moves. You can still do them anywhere, anywhere else on the chart too. The key is to be able to identify a consolidation. Like this one's a very obvious consolidation. You can identify the top, identify the bottom. Once you got that, then you measure it and be a little conservative with the targets. That's about it. If you're not able to identify the top and bottom that you need to measure from, then you can't use it, right? It gets difficult. As long as you can identify a place to measure it from, it's easy. Very easy to know where to get involved. Yeah, even here you can see the top and bottom right there. Here, top, bottom here, and that would have worked out as well. All kinds of ways to do it. I did a whole webinar on this. Well, not a whole. It was one big section of a webinar. It's even in the course, guys. Again, on our YouTube channel. Take a look in there. But even look at my previous webinars. We talk about measured moves and the different ways to use them. I gotta say, man, they're very powerful. Very powerful. Well, we got Evo. What made me migrate from measured move to contracts leverage? Migrate from measured move to contracts. Still use measured moves with contracts. Now, measured moves have nothing to do with contracts. It's to do with price action. It has nothing to do with the instrument I'm trading. I just do measured moves on candlesticks, or even you can do it on a line chart or anything, as long as you're doing it on price action. It works. Then you can trade that price action, whether it's the equity or the options or the futures, whatever. So I still would use them. If I was in this trade or interested in this position here on this gold breakout, I wasn't watching it at the time. If I was, I would definitely have measured moved this whole thing and caught this just like we did here, because there's nowhere else to go all-time high. So you can do it quite simply. Yeah, if you measure this distance here on the SPY and see if it actually worked out as the breakout went down, you can do it over here too. No big deal. So I haven't moved away from it. It's just one tool that I have that I can use to identify targets when I want to. Typically, when it breaks out, there's nothing to the left to look at. Measured moves in individual stocks and the change to. Well, I still don't get your question. There are two different things here. Measured moves, I use them on the tickers as well, on the individual stocks when I traded them. I use them for targets, and then yeah, I'd use options contracts at the time to capture the move. That was just the instrument. But then where do I get out of the move? Where do I exit? I'd use a measured move level. I did that most of last year. You guys saw that with the Fibonacci stuff. That was just a defined measured move, as in every day was the same candle. You measure it and you go from there. But I can use measured moves here on the contracts as well. I mean, it's the same. That's just a simple concept of measuring how far it's gone, and therefore it'll go the same distance. That's all there is. Actually, no, it's probably the simplest way to find levels. Maybe just go with that and forget about hunting down levels every day. Again, that's what I used to do with the Fibonacci stuff. Very straightforward. Brian said the court said it could take another month to resolve the tariff issue. Okay. Is the guy going to get impeached by then, or what? All kinds of things are going to happen in the next month. By the time they figure this out. But cool. Yeah, I imagine the court will take time to figure this out. But we know that there will always be announcements, and the fact that it's pending will make things move in the markets, right? And any little piece of news comes out, it could impact price action. So, yeah, we have lots of volatility to play with this first quarter. Lots and lots. And again, the longer term picture for me is these silver and gold. Gold is the obvious one. Silver is a volatile one. Oil and oil, of course. I don't invest in oil directly, but the oil industry. Oh, and here's the other measured move one. It's an obvious one. If you look at it from, there's a different way of doing measured moves. Again, this is all in the course, but we can go through it now. Look at this move that it made from bottom to the top, measure that, and then measure out the second move, which starts at the new bottom, which is here. It goes the same distance. That becomes your target. And let's see, the bottom to the top, it would have been, we can just simply use this candle. So what do we have? Let's try and measure this. 46, let's call it 46.20, nice and easy. The top of it here is 4,700. So 46, what do we say, 20? So 80 points. From here, then you go 80 points. I don't know, be conservative, go 70 points. You don't get too wild about it. 46.60, go 70 points. Somebody give me that number. Who's got it? Who's got it? 37.30, is it? Somewhere here. You land up about here. There you go. Yeah, thanks. There you go. You guys got mental math. Thank you. Yeah, so it all adds up in the similar area, right? 10 points less. So measured move again, you measure one move, and then you have the consolidation when the second move starts. You identify the bottom of it, which happens to be here. You're ending up catching a breakout here, and you're taking it off at this 4730 area right there, because that was the measured move identification. That's it. A little more tricky to do it this way. I prefer to do it where you just measure the consolidation rather than measure the distance that it made a trend. I just think it's easier. Like much easier. And again, you don't have to use this for all-time highs only. You guys saw me use this again on the Fibonacci levels, which was every day, you know, use it on all kinds of things. This would be fun if you had a measured move in this consolidation and the drop happened. You'd probably gone that same distance. Look at that. You can use it anywhere on the chart, really, as long as you identify the consolidation. All right, let's see. What do we got? 10:30, and everything's a mess. Okay. Let's look at things before we wind down. So the SPY going nowhere, no room to the left. It's just sitting there, great big mess. Qs, the same thing. If anything, a little bullish, but let's look at it quickly. 1 minute chart's a disaster. Forget about it. This one, the Russell, yeah, big double bottom, dropped a little, finding new buyers. Oh, look at this. This could be a retest. You see this resistance area right here, the middle of the double bottom? So it went, and sure enough, now it's bouncing off of that. And this 30-minute candle so far. Yeah, that's that low. Let's zoom in. There it is. That's that resistance. You have the 5-minute ORB breakout from here. Back retest. Everything bullish, right? That actually would have been a good entry. I wasn't even looking at it. And you guys got me talking about measured moves. I didn't look at this one. It's like the third setup I missed out on in the Russell. So funny. Anyways, yeah, everything bullish here. What's interesting is it found new buyers and they're higher up, which is, and again, new lows, higher lows, which is encouraging for it to break overhead resistance, which we know is right in this area. So it's all encouraging. This is the one to keep an eye on, I'd say, for a continued move up today. Oil, similar idea, very bullish, not dropping at all, consolidating, ideally continues. Gold, all-time high. Again, same thing here, wait for breakout and retest. You have this consolidation and breakout, retest, continue on. And silver is just a mess. Very hard to trade this thing. This one has a different kind of behavior to it. But there you go, that's all I see so far. Look at the Russell 2000. That seems to be the most interesting one today. Already a few good setups. All right, anyone got anything else you'd like to discuss? Because I think the market's actually mostly a mess. Not much to think about. Well, they're a very quiet bunch today, huh? What happened? 3-day weekend, forgot how to trade? There you go. Evo, small green day. Good, man. Yes, congratulations. Maintain your capital, live to fight another day, make a little bit of money. Hey, welcome. Good stuff, guys. All right, cool. Let's end this one here. As always, we have our Discord room where people are trading in there together all the time. It looks like there's a few people in there now. And this room is always open as well, so we don't trade together. I'll come in and check in on you guys a little later. I got a few things to take care of. And of course, I'll be looking at the market. So if I see you guys live or online, then I'll come and say hi and maybe we find something together.
Nice session, AV.
Sure. Welcome, Dan. Thank you very much. Thank you. Cool. So y'all take it easy, and I will talk to you all soon. See us.
Thanks, Evie.
Welcome.